Welcome back, everybody, to another week of analyzing the indices using technical analysis. Remember, as always, we are not financial advisors, and please do your own due diligence. We'll start with the Dow. We have this long-term, I'm going to call it possible support, because it isn't really a support yet. It's a potential support if we hit this line here. We do have a real support, though. This horizontal line going across here, we have three solid touches, but it hasn't been visited in quite a while. So in a way, we don't really have a recent relevant support. So we're just kind of floating around up here in outer space. It's good outer space because things have been going up. As you know, back in March of 2020, we had a huge crash, which amounted to about a 38% dip of the Dow. That was followed by a 52% run-up, followed by a 10% dip, followed by a 17% run-up, followed by a 9% dip, and then another 9% run-up, followed by a 9.7% dip, followed by a 20% run-up, and then some smaller dips and runs. And then to where we are today, we've had a 9% run up really since early this month. That's a lot of upside for just a little over 2 weeks of stock market action. Now, the volume has been steadily decreasing as that price is going up, but the volume is still huge. Look at all these green days of volume. Yes, they are decreasing, but even the lowest volume day is pretty far above average. Followed by, we've had 2 down days basically last week, also above average. So there's a lot of dissent within the market about what the market is supposed to do. We don't have an obvious support coming up. You know, we have these 2 possible ones, and this lower support is a real support because it has 3 solid touches, but again, those touches are a while ago. The last time we even had a touch and a bounce was the end of January, and we're later middle half of March and no touches. Now this big long uptrending support isn't really a support because it's only got 2 touches, and they're a long time ago. One was just the very bottom, and then somewhere in the middle here we had a touch, and then nothing for all of this time. So the only thing that would make me think it could be a support, trajectory. It's pretty accurate in terms of the direction. I would not want to short the market. We've had some comments on some of our videos of people shorting. It's a very slippery slope. I would also be a little hesitant to go all in on anything at the moment because the market just has got an identity crisis at the moment. So right now, kind of wait and see on the Dow. Nasdaq has a little clearer story. We still have this long-term trend with 3 very clear solid touches. So this is an established trend line, and it does appear that we're moving towards another bounce. Will we hit that bounce? I don't know. We got within 2.6% of reaching this support again. So that's within a trading session away of hitting or breaching the support. Now, just like in the Dow, we saw lots of drops and then big runs following them. It's really true with the Nasdaq. The Nasdaq had a 31% drop a year ago, followed by an 84% run. That's just crazy that it just like it was unstoppable. Then followed by a 14% drop. It was just needed some kind of relief from that just relentless run up. Followed by a 15% run up, followed by a 10% drop, followed by another substantial 27% run up. Getting close to where we are now, we recently had that 12% drop, which was viewed as a much needed correction, basically giving away a little less than half of all of those gains that were realized since end of October. And now we've had a little bit of a run up here. It's been almost a 10% run, a 9% run, followed by a 4.6% drop that actually ended up on a high. I can say that we're still somewhat in bounce territory. Yes, it could continue down and it could bounce or even breach through this support. I remain very bullish. These green days here that we had were big volume days on up days, And yes, we had a big volume day on a down day. The sellers ended up winning the day. We're in a very established bull market, and I'd be hard pressed to bet against the bull market. To recap, the Nasdaq still is in bounce territory. It may go down another 2 or 3% before it goes back up, so you just have to be aware of that. All right, now looking at the S&P 500, we've been talking about this possibility of a megaphone pattern. Some people call it a reverse wedge. But the megaphone pattern, in a nutshell, is an argument between the bears and the bulls. The highs get higher and the lows get lower, causing a wider disparity between the two camps. Recently, the disparity between bulls and bears has not been growing. So in a way, it might be diffusing the idea of a megaphone. What is clear is that we are still in an uptrend. Now, we had quite a bit of volume on the last 2 down days, and that's significant, but it's not surprising, and it's not necessarily indicative of what's to come. Because right now we're in the middle of this trading range, so it really could just as easily go down, hit this support line again and bounce up. It could also easily continue up and make brand new highs. I personally would not invest at this point. Well, for me, it's a wait, watch, and see. And what's going to happen is in the next few days, we're going to have a very clear indication. If it starts really going up on high volume, there's your answer. If it starts going down towards this support, I would rather wait for it to hit this support and then bounce up, because this is a bona fide, well-established support line here, even if it's part of a megaphone pattern, which remains to be seen. So stick with us. We'll have more information on this. This next week is going to clear up some of these questions. Leave comments below if you have questions. We'll be glad to answer them.